The main reason I've been buying H's over A's is that H's have long traded at a significant discount to the A shares. That said, there are some companies that only trade in the A share market, like Guizhou Maotai, for example. So it really depends on which companies you want to buy. Now, earlier you were talking about Evergrande. As I've long said, that's one company I've never touched with 10-foot poles duct taped to, one end to the other. But there are a number of reasons why I prefer some businesses to others.
Okay, so that 10-foot pole, does that reach only to the equity side for Evergrande? What about on the debt side? Not just Evergrande, but a lot of other names which are throwing off just very, very tempting yields.
Oh, indeed. Well, and especially when you talk about yield, there's earnings yield, there's dividend yields. I generally like investing in businesses I understand, businesses where I can model them and I can see how I'm going to get back 3 times my money within 5 or 10 years. I think the problem I see with property developers is that they are a business that is very, very capital intensive, relies on lots of borrowed money, and sells something that's often purchased with borrowed money. If you give me the choice between a property developer like Evergrande or a company like a Tencent or a Guizhou Maotai, I will very often pick the one where I can understand the product and I can understand the financials much more easily.
Shouldn't we be selective, though, Tariq, with even in the property side? Aren't there stronger credits with stronger balance sheets? And aren't we at risk then of throwing the baby out of the bathwater, especially when you consider the common prosperity goals and the fact that there's going to be more affordable housing?
Well, I think there's no coincidence that the common prosperity message came out right around the time Evergrande was running into financial trouble. If you've been to any third-tier Chinese city, just before the pandemic, you'd see lots and lots of apartment buildings, many of which are not fully occupied. I think too many Chinese for too long had the idea that they were just going to buy apartments, buy more apartments, and that somehow that was going to generate wealth. The problem is when you have too many landlords and not enough tenants, those landlords are just going to see much, much lower rates of return than they'd expected. So that's something that, yes, less levered names might suffer less than more levered names. But generally, it's a sector where I think you could do better staying out of. Obviously, there are going to be people who like the property sector. If you go there and you find companies that have better balance sheets and are probably positioned in better cities, yes, those may fare better. But common prosperity doesn't necessarily mean that those developing those houses are going to make money.